There's nothing wrong with minimising tax. I don't know anybody who doesn't minimise their tax.
And that you were doing so in ways that were contrary to the spirit of the law.
Oh. Well, I just got through telling you what I thought about that. I am not evading tax in any way, shape or form. Now, of course I am minimising my tax, and if anybody in this country doesn't minimise their tax, they want their heads ripped. Because as a government, I can tell you, you're not spending it that well that we should be donating extra.
Good afternoon, everybody. Thank you, Stella. Welcome to another one of our live and interactive webinars. Thank you for joining us, and what a great insight to what today's about from the late, great Kerry Packer. I love his statement, if you're not minimising tax, then you need your head read. It's something we all certainly should be looking at, and it's a great foundation for today. It's a fantastic clip. You can jump on YouTube and search it. It actually goes for about an hour and a half. What Kerry does go on to discuss in more detail is the labyrinth and complexities of laws associated with minimising your tax and how difficult it can be. He has a real strong kick at the Senate actually, and talks about how hard it is and how he needs to be surrounded by professionals, and even talks about having books up to here just to get his tax law sorted. But what he does also stress is, while minimising tax is paramount, his ability to grow his business and his ability to look beyond just minimising tax and work within the law and the benefits associated with the law to grow wealth, whether it be personally or for his business, is paramount. And it's a great sentiment. So minimising tax, while it's important, it's not the only thing to be looking at. And Kerry Packer raised some really good points there. So a great way to start, a bit of fun. And I think we all agree that the more we have in our pockets, the better. The key is what we do with it. So we're going to cover that today. And we're joined by a number of experts. So we'll go over that, share some insights. Before we start, could I just remind everybody that please feel free to send in some questions. There's some chat rooms or Q&A answers down the bottom. I'll answer those. I'll address those during today. We've been very lucky, and thank you for everybody. You've sent in a couple of pages worth of questions here, which I've got beside. I've shared with the team prior. Not surprisingly, and as is common, they're very much tax related. The only difference with most of them is some are asking about what's the difference between COVID, working from home, and not. The rest are very much about saving tax and very surface level discussions, which is normal. So they're the very common approach to tax. Today, we're going to take a much wider view and talk about what the successful people ask their accountant at tax times and how they prepare, what they get in line, and what's their approach to their tax meeting. So before we start, let's talk a little bit about RJS. Next slide. Thanks, Stella. RJS, as you know, 10 locations across Victoria, over 100 staff, 35,000 clients, both staff and clients growing very well. So the business is doing very well, even during COVID. And thank you for everybody who's been so helpful in the team and also in our client base and working remotely. We've loved working with you over Zoom, and we're still here to help and work with you as always. So we'll get through this, as will you, and congratulations to everyone doing such great work during hard times. Thanks, Stella. This slide is a fantastic insight into what today is about. So this is the foundation of which RJS was built and continues to grow, continues to service its clients so well. At the center of everything we do is, of course, our clients, your financial potential. And then we surround you with professionals to make sure we achieve your goals in the most effective and efficient manner. With over 10 offices, there's professionals all over Victoria here to help you. I will refer back to this slide later today, because what this does allow us to do is it's a great footprint to develop a wider agenda and to prepare for when you're going in to see your tax professional at RJS Accountants in any of the offices, or if you're doing phone hookups with the team. The reason I specify this is this service wheel is in every office and in every part of every meeting. But often clients are unaware that they can prepare for their meetings prior and start to think about it. If you look over the left-hand side of your screen on the outer rim, it starts with tax planning. Today's focus, and today's webinar is really focusing on one point, in fact, asking more questions than just how do I save tax? How do I have a wider discussion? This is a great script. This can set the agenda for you to prepare before you come. So if you work your way around the outside of the circle and prepare that as an agenda before your accounting meeting, you'll be much better positioned to have a much wider discussion. You can think about your finance and lending structure, your superannuation, that includes self-managed super fund, what sort of investments you have and what sort of advice you need. Have you started to think about retirement planning? And it is never too early to start. Believe me, it can be too late, but it's never too early to start planning for retirement, and talking to your accountant's a perfect place to start. Personal and professional asset protection, absolutely paramount. Integration of estate planning for those who are building wealth and starting to look for transfer of wealth. Great tax plays, great wealth plays in there, and they really should be considered early. Business accounting and consulting services, that speaks for itself, but it really does encompass your personal wealth planning as well. So having that wider discussion. Cash flow and debt management has a drastic effect on your tax planning, as is your business and personal structuring for your planning. So if you're stuck for an agenda or thinking about how to better prepare for your time with a tax accountant, here's a perfect start, and sit down together and think about that before you go in. It's a great place to start. And it's the foundation of which RJS has continued to build success and helping its clients and having our guiding vision. So thanks, Stella. A general warning. Everybody, today is general in its nature, although much of this will resound with you and you'll think it's very much focused on you personally. There is no advice given today, and anything that is given is general in its nature. So please don't take on board any of this and implement it. The best thing you can do is pick up the phone and speak to any one of your RJS Accountants professionals. We're all here to help. I'm very happy to take you through this in more detail and a more personal level. In fact, anybody joining us today, we're very happy to offer a complimentary 30-minute session with any of our professionals to address anything that you'd like to talk about. So please don't take it as personal. It's very general in its nature today. Thank you. Thanks, Stella. Joining me, we have the three musketeers. We have Roy, Kane, and Tony. Roy, as you all know, Director of RJS Accountants. Thank you for joining us today, Roy. Enormous experience in accounting, business, and personal. Helping Roy today is also Kane, account manager. Again, enormous experience in business and personal tax advice. So thanks, gentlemen. Really looking forward to hearing you address some of the questions we've got prior, and also addressing some of the things that we set out in the agenda today. Tony, thanks for joining us as well, head of our investment committee and director of Madoris. Tony's role is our head of wealth, senior executive planner. So Tony's role really does bring the glue together, or provides the glue in an integrated advice meeting between advisors and tax professionals or accounting professionals. So having that extra professional in your discussion is paramount. So thanks, guys. I'm really looking forward to hearing your insights today. So we'll introduce you all shortly. Thanks, Stella. So, gentlemen, I'll hand over to you, but let's get stuck into what the key is today. What are the most common questions that we hear from our tax clients come tax time? And we wrote this agenda based on all of our experiences. We got together and put these out. And not surprisingly, as I opened with, it nearly mirrors the 2.5 pages of questions that have been sent in prior to today. So thank you for everybody for pre-registering your questions. And they nearly mirror what we put into place. In fact, you can conglomerate them all into the same categories. In essence, everybody's asking the same thing. How do we pay less tax? Which is a great start, but we really want to talk about how to move that focus to be a much wider discussion. So most common questions: how do I pay less tax? I want to buy a property so I can negatively gear, pay less tax, and the rent will pay the property off for me. What do you think? How much can I put in super? All great questions. Should I set up a self-managed super? I've heard they're good to save money and taxes. What happens if I don't have a will? How much will I need to retire comfortably? How do I protect my assets in a downturn? That's a great discussion point and really become relevant post-COVID, but it's something you should be considering at all times. When's a good time to put money into the share market? What is my business worth and how do I prepare it for sale? And if I've made a profit, where's the money? Because it's not in the bank. Another common discussion. So, gents, I'll hand over to you. Roy, I might start with you first, if you don't mind. How does this align with your questions and meetings? Oh, and it looks like I've lost Roy. Kane, we've lost Roy. Kane's first came off the rack. How does this go with your discussions?
Oh, look, there's a lot of discussions that we sit with our clients one-on-one, and I guess you've got to have the open conversations. It's definitely interesting to hear where their lives are. I think don't always look at the tax deductions that they've always got there in front of you, but it's actually talking about them, getting to know the client better, where their situations are in life, what are they planning for in life. So it's to go in there and claim a lot of deductions is not always the best thing to do for them. There is things in there that people don't realise, and I think the common question is, if I go and spend $1,000, am I going to get $1,000 back? Never happens that way. And I guess the biggest point that I say to clients is, you go and spend $1,000 and your tax rate's 19 cents in the dollar, or 19% tax. You're out of pocket a lot of money. So do you actually need it? Don't spend it for the sake of spending it if you don't need it. And that is a big thing that we have with our clients, is that, yes, we can claim things. There is, as Kerry Packer says, minimise your tax. There is a law to here, and we can claim as much as we can in the actual rules that are around us, but don't spend it if you don't need it.
So what you're saying, essentially, tax deductions, you're still a loss of money.
100%, you're out of pocket. For someone who's spending $1,000 at 19% tax, they're $810 out of pocket. That's physically out of their money. So yes, they might get a little bit of a refund on that money, but they're out of pocket. What could they do with that extra $1,000? Could they invest that money? Maybe. So thinking outside the square a little bit.
Yeah, I like what you opened with. Deductions are not always the best thing for them. So when clients come in with in the old days, a shoebox full of receipts, or now it's a whole spreadsheet. Yes, we've spent that money and it's nice to get some back. But what you're really saying, what I took out, that deductions are not always the best thing for you. So, that's not your primary focus, but what are you really planning for? So really what you're saying is, what are your future goals?
Yep, correct. Yep. What are your future goals? Sometimes I'll sit with a client and get their information from their tax return and just push it aside a little bit. And you just have that conversation with them, because it's the past. It's something that's happened in the past. They've already got all their deductions there and then. But what are they doing into the future? Plenty of stories around that with clients. Yes, we can go through all the list of things that they've got there that they can claim. You do get some wild deductions that come out there out of left wing, and I guess, some great stories that have come through from the whole team themselves. Had a client that wanted to claim a hang glider at one stage in their past, is saying that was going to increase his income because it got him mentally better. So the reality is, there's some weird things that happen out there in life, but just sit down, look at the reasonable items that they can claim, but also just prepare going into the future. Yeah.
And thanks, mate. What are your thoughts on whether it be self-managed or super as a tax strategy? We often hear clients come in focusing on that, minimising tax. Is super the answer?
It's one of the biggest deductions that clients can get. It's in a year it could be $25,000 less their employer contributions. It's a big deduction. So and it's putting that money into their nest egg, their overall wealth overall. So, but it is not always the best thing. I'm not going to put someone that's on 20 grand and put 20 grand into super. It's not going to be worth it. Their cash flow is going to be affected. So it is getting the right plan going ahead. Their age comes into it all too. When can they get access to that money? Is there other ways to invest that money outside of super and do it in a family trust if it means to be? So there is a lot of questions that you can actually sit with that client in that half an hour appointment that is outside of what you've physically done in the 12 months. Technically, you've got till May the following year to do your tax return, so don't rush it. Let's get it right. We can get all that right. Let's plan ahead.
So other questions you could be asking when they're thinking about putting 25K or more into super, is it, have you still got personal debt you could be paying down, your mortgage? Could you be investing outside of super? Do you want to retire before 60? Those types. Does that have a much wider discussion as well?
Definitely. I think it's inbred from our parents to say pay off debt. There's no doubt about that. And if you, I guess a good example that I say to clients, if I had $10,000 worth of funds and I put it on my home loan, and your home loan rate's at 3%, you're only saving $300 a year. Where if I actually put that 10 grand into my super and I had a tax rate of 37.5%, there's a big refund that you can get out of that. It's over nearly $4,000. So you got to weigh this up. What's the best strategy going forward? And yes, getting your tax return, getting that money back, I get it, but planning ahead is more important.
Yeah. So how do you come up with those discussions? And so it's something we cover off in the next couple of slides, but it's a good point you raised there. How do you find the facts? How do you delve in and do some modelling and find out what's best?
A good thing I do is actually profile the client, I guess, and it's probably not a good word to say, but it's, write down their assets and liabilities and what's their income and come up with some ideas of what their goals are together. Even with business clients and individuals, we're starting to go down the track of what are your top 3 issues that you're having in your business? What's your top 3 issues that you're having individually? What are they? Are they cash flow? Well, spending $1,000 on a deduction that you're going to be out of pocket for $800, is that the way to go?
Yeah.
So writing down all the assets, liabilities, coming up with a plan, and then bringing in experts like Tony involved to actually work together in the same room to actually plan ahead.
Yeah, I think that's great interplay there too. Having the ability to integrate your advice and step outside of just your tax strategies, where someone like Tony or the team down there come in. Tony, what's your experience when people are focusing on tax? What do they miss out on? What's the opportunities they miss?
There's plenty that you can miss. First of all, I'd say that these questions here are certainly the questions that we receive from a financial planning perspective in relation to tax as well. So how do I pay less tax? And I think a lot of that comes from people, and I'll just keep it extremely basic, but people seeing their pay slip and seeing, well, I earn X amount of dollars, but there's this amount of money that goes away from me that goes somewhere else. How do I get some of that back? And so that's where, from a tax planning, that there's that thought process, almost the fear of missing out. And from an advice perspective, and much like Kane has just said then, and Kane and I work extremely closely together and with a lot of Kane's clients, where we are in the same room and we do go through that meeting process together and finding out exactly what it is that the clients are looking for.
Yeah, okay. Yeah. And could you share a story when someone's come in and you've questioned them on just their tax approach?
Oh, absolutely. Absolutely. I mean, there's one that comes to mind, and certainly, much like Kane said, actually, it's like this, I'll use a current example, then I'll use a previous example as well. It's like the $25,000 that you get now for having $150,000 worth of renovations done at home. Well, if you weren't planning to do $150,000 worth of renovations, do you really want to spend that money just to get $25,000? And you look at the opportunity cost as well. A good example that I've had previously is where I've had a doctor come in. He was a client of another accounting firm, and he was looking to get some advice. And he said, "Look, my accountants told me that for me to reduce my tax, I should put $80,000 into blue gums." Now, and I see Kane there laughing away, but it is, and so there's $80,000. Now that $80,000, now he'd actually done that. He never got that $80,000 back again, and, if you want to look to increase your tax deductions, pay your accountant more,
Why not?
You'll get better advice than just looking at contributions to blue gums and things like that.
Well, so that's a great example of someone having the absolute blinkers on and focusing on tax strategy only. Trees, there's 100 in blue gums, there's 100 little, they were tax schemes only, which just meant people lost the ability to do a whole lot more. So there's lots of times where that's happened. So not a fantastic outcome. The other simple solution to paying less tax is earn less money. Has anyone ever taken you up on that one, Kane?
No. But saying that, there is clients that will go out there and want to reduce their income just to get more family benefits. So it doesn't make sense. If you've got to look at it in that more income you earn, yes, you're going to pay some tax. We've just got to minimise it through the strategies. And it's the strategies that we sit down with the clients and talk it through going forward. You don't see BHP going out there earning billions and billions of dollars and spending billions and billions of dollars to pay no tax. They pay tax.
Yeah.
They've got more money in the bank too to pay their shareholders. So a good way of doing it. That's the end of the day.
Is to earn more money. Yeah. Yeah. And there's some business owner questions here too. What's my business worth and how do I prepare it for sale? That's that's a pretty wide discussion. But coming into tax time, that's an example of a much wider strategy discussion, isn't it?
Yeah, it is. It's definitely sitting with the client and planning, and it's not a 12-month plan. It's a 2-year plan. Reality is looking at when you're buying businesses, you're looking at history, or the person that's buying it's looking at history. So you want to make sure that your figures are looking good. So you want to make sure you're planning ahead. Going spending money to reduce that tax, yeah, that might be okay, but you've got to have a profit there to actually get there. So forward planning is very crucial, and it comes part of our top 3 questions we go with the client. We have a gap process there that's working with our clients, and if they're saying that their number 1 item that they're having problems with is cash flow, and their second one is that, hey, we're going to sell the business in 2 years' time, well, that's where you've got to start strategizing going forward.
Yeah.
Apologies, gents. I just cut out before and I'm back.
Oh, thanks, Tone. In terms of planning for tax, there's something that we've all seen with business owners. How do I minimise tax? How do I minimise tax? And Roy, you might be able to take this one, where small business owners focus on their distributions and getting them below the 80K each, separating so they pay minimum tax. But what we find come sale of business time or expansion time or time to lend and grow, that they now don't have the funds or as you said before, the history to grow their business. So again, it's the example of putting that blinkers on and focusing on tax minimisation is actually affecting their ability to pull out income for their personal wealth and address their personal situations, and then also grow their business. You got some insight to that, Roy? We're losing Roy back and forth. We'll come back to you when you're ready, Roy. Alf, sorry, Kane, can you take that question? I guess it's let's go to the next one if I can. Let me just double. Okay, Roy, you there? No, we've lost Roy.
Yep.
Okay. So what we're simply saying there is where we're seeing business owners focus on their their tax reduction, it limits their ability to have a much wider scope of discussion. So Tony, you'd see that in personal situations as well?
I see it in personal situations, and this is where it relates to from a business perspective as well. And from a financial planning perspective, what we do is, we sit down with clients, we map out what we're going to do over the next 6 months, 12 months, 2 years, 5 years. And from an accounting perspective, where I've sat with Kane with a number of business clients, and where we see great value and we see businesses actually turn things around is where we have those consistent meetings on a regular basis where those business owners are, I'll say, focused, coming in and saying, well, okay, look, this is what I've got, this is where I'm heading, and they actually leave all the hard work as such to Kane and myself to do, to be able to map that out, me from a personal perspective and Kane from a business perspective, to actually really get them and get their businesses moving to where they want them to be and go.
Yeah, great. Okay, so here's some of the more common ones. Let's have a look at what those who are financially successful focus on in their question times. Thanks, Stella. Okay, so what sort of questions are financially successful ask their accountant? You see a real shift here in focus. The first one is the biggest one. How do I make more money? Becomes a real difference between how do I save on tax, which we, as Kane just pointed out, a deduction, you're still losing money, and focusing on that's certainly not the best option. It doesn't cover everything. With a successful focus on how do I make more money, and that's a point Kerry Packer was making in his Senate committee there. He was focusing on making more money, happy to pay tax, wanted to minimise it within the rules, because there's lots of rules to encourage us to do it. There's lots of rules that actually encourage us to invest because they want Australians to do that. But the real focus goes to how do I make more money? And then how do I structure my affairs for tax time while still increasing my income? So that indicates planning and forethought, not just the once a year appointment, but thinking about it in advance. How best can I use my tax return to create wealth and work towards my financial goals? So this is a fantastic insight to someone who understands that, yes, I want my tax back, but what am I going to do with it? Because the real question is not that I want to pay less tax. The real question or the real query is, I want to pay my debt down. I want to invest for the future. I want to have more holidays. I want to look after my family. I actually want to do something with my income. And not have to pay tax isn't a solution. You're going to have to pay tax, but minimising it, but looking for your other goals is really paramount. I like to meet regularly, review actual versus forecast income, expenditure versus goal attainment. Can we do that? Great question. So this is, again, an insight to someone who's looking, am I on track against what we forecast? If I understand what I earn, understand what I spend and doing something smart with what I've got left, how do I know I'm on track? And do I want to wait annually and look in reverse? Or do I want to be up front and start to plan forward? Now, that's for business owners or for individuals. It's a great way to start to plan for tax season. So for business owners, we're looking at revenue versus profit. For individuals and homeowners, it's income and expenses and what's left over and what we're doing with it, and mapping that very regularly. In other words, having certain clarity on your numbers. Doing gap analysis is what Kane spoke about earlier. Finding out where the holes are in our financial goals and our plans, and am I actually progressing towards them? Can you provide me with modelled financials so I can make educated decisions? This is a great ability for an accountant to model it into the future for you before you make business or personal decisions. So there's no more just stabbing in the dark. This is actual forecasted figures. How do I take control of our financial and personal future? And the one I like the most, this is supplied by everybody online today, is what have I not asked? What am I missing? In other words, what am I unaware of? So they're brave enough to say, I may not be doing everything right. And I think these questions really set the meeting tone up for a different structure. Roy, are you there before I pass you?
Yes, I've recovered.
Welcome back.
Thank you. It's been a struggle.
That's what live webinars are all about. That makes it fun. Thanks for getting back together, mate. So what we've covered off while you're offline is the questions that most commonly asked, and as we focused on, it focuses on tax, and it actually restricts the opportunities for people to have wider discussions and grow their wealth. For those meetings you have, as the accountant, both with individuals and business owners, when they follow the most successful questioning styles and approaches, how do those meetings go in comparison to you? What do you see the difference is?
Yeah, I think it's not just about getting the tax refund, and you might have already said this, but it's very much about what the future and how do we get there? What are the stepping stones? And I think that's the difference, the main difference between really successful people. They're looking for planning, future ideas, that sort of thing, not just about the tax refund.
Yeah, great. And in the meetings when people come focused just on tax, how hard is it for you then to bridge that conversation to a wider discussion compared to those who come in ready to go?
Yeah, well, often people who come in, they're focused on the tax refund, and that's not to say that's a real bad thing, because that's what they come to see us about. Yeah. But they've got to understand that there is more to a financial services business than just the tax return. Yeah. So you just got to ask more questions, prompting the client about their future. That's probably the difference, where those, if we set the agenda early, those that have done this before and are more planning focused, and they already know what we're going to talk about. But it's those that come in thinking, I just want my refund, then I'm out of here. They take a little bit more time to adapt to how we do things.
Yeah. What's your three biggest questions you ask those people to get them open to a wider discussion?
Yeah, so I ask, the main question is, I ask them about their goals. What do they want to achieve? Now, if the response comes back, I want to make more money, that's not a goal, because the goal, money just sits in the bank account. What do you want to spend that money on is really the question. If they say, I want a holiday, or I want a new car, or I want to pay for a wedding, those are the goals. More money might achieve that. Then you start asking about what are the steps to get there. If it is more money, then how do we go about that? And money is an activator for many goals. I understand that and I get that, but it's really the goal is money is just allowing you to reach that goal. So that's really how we position it.
Yeah. Okay. Yeah, that's good. And people take that on board well.
I would say that 99.9% of the people would come out of the appointment feeling a buzz, because there is nothing like spelling out what you want to achieve, have some steps to achieve it. We make some notes so that we're across it in 12 months or 6 months or 3 months when we're seeing this person again. And they go out on a high. They leave our office on a high. They feel they've got direction. And some of these direction, we're not talking about goals for, next week. We're talking about some goals that might be quite long term. I've had a discussion this week with somebody that was talking about a goal that was probably good 15 years away. Now we're talking about him wanting to have an investment property. Two children want 2 investment properties. And he's not in a position to buy his own home now. So it was, what are these steps that we need to go through? So they can be long-term, medium-term, short-term goals.
Yeah, that's absolutely paramount. Yeah. Tony, you'd see that on a personal side as well?
Certainly do. And from a personal side, where it is exactly that, mapping out, what do you want to do over the next 6 months, 12 months, 2 years, 5 years, 10 years? And then, as we do with financial planning clients, and the accounting team certainly do the same, is sit down regularly and review that. Are you on track to where you want to go? And from an accounting perspective and a tax perspective, I mean, that's where Roy, Kane and the team, where they'll sit down with businesses, have we hit the forecast that we made 6 months ago, 12 months ago? From a financial planning perspective, it's no different. And from a personal perspective, making sure that you're hitting your goals. And look, you're not going to always hit your goals. There's no doubt about it, but at least know if you're off target, why you're off target, and what you can do to get back on target as well.
Thanks, mate. Kane, how important is to have those cash flow or forecasting discussions at tax time with people?
Oh, definitely. It gives you the decisions going forward. And, we work with clients where even if we went back to the basics of what their budgets are, we do a $10 package for zero, and we can run their budgeting through a system that basically we can work out where their shortfalls or where their extra money they've got to play with. So people don't know what they're spending half the time, and to getting back to that basics will actually help you plan going ahead. Those discussions are pretty important. Where can they reduce some costs, or if they've got no money at all, well, you can tell because they've got no money at all. They're rushing in to get their tax return. That's not planning. That's a result. So you've got to plan ahead for that result, for a better result going forward.
I was about to say, so not understanding the cash flow just increases the need for the tax return. So it changes the focus back to what we shouldn't be focusing on.
100%. Yep.
Yeah. So we need to change a bit more to get the outcomes we're after. Yeah. Okay. Is there anything else that any of the team, Roy, Tony, or Kane would like to add that what you hear and see in successful questions before we move on?
I just briefly say successful questions, and from an accounting point of view, and certainly from a planning point of view, the question that we continue to ask is why? Why are you looking to do this? And it's not about and the way that I think it's like clients that are coming in just to get a tax return done. You're going to a pharmacy just to ask for Panadol, paracetamol. All right. Whereas actually you may have a headache and say, well, okay, I actually need to go to a doctor to actually get a diagnosis of what's actually causing me my headache. Is it, I've got, nerve pain in my neck or whatever the case is, or I've slept funny, and so on. So it's actually getting that diagnosis. And what happens is from a planning point of view that we do extremely well, and from an accounting perspective as well, is to really wanting to understand why you're looking to do what you're looking to do. And that's and as soon as we get that information, then we'll be able to find the solution to those problems.
Yeah, great, good points. Guys, I'm just going to go to the audience. I've just got a good question here. I'm pretty sure Roy or Kane would like to address this one while we're on it. Thank you for the question. It's when you're booking your tax refund appointment, can you bring up these questions at the time, or does it need to be a separate appointment? And would you recommend emailing through your question in advance? Roy?
Yep. Yeah, good question.
Great question.
We have a preference to set the agenda early. We do it a lot with our business clients. Mm-hmm. If we're having a business appointment and let's say it's a trust and we're talking about end of year accounts or sign off, to send out the agenda so they can think about it beforehand is a good idea. If it's because it gives them a chance to evaluate what they're going to say and how we discuss it. If it's a personal tax return, we're hoping this year that we will introduce this sort of goal setting with a very high percentage of our personal tax return clients this year. So this is our target. This is our mission for 2020. We're hoping to be able to do it in the appointment, and we do know already that July will be telephone appointments.
Mm-hmm.
They won't be face-to-face, but we can still do this by telephone or Zoom. So we're hoping that we will have time to do it in the appointment. We don't have to do it separately. And it may require a separate appointment, because once we've asked some key questions, we've worked out what the goals are, we then know what the stepping stones might be to get to those goals. And that might involve a solicitor to do wills. It might involve a wealth manager. It might involve a finance person. As an example, the one I spoke about earlier, who earlier this week has a goal to purchase 2 investment properties, so they don't even have a family home. Our first stepping stone was to do a borrowing capacity based on last year's income and what they will be able to borrow. So they're not going to get a house this year, but it will be about 12 months away because their incomes are just increasing. So they know now what their how they're going to, what the stepping stones are to get to those goals, and that involved in a second appointment or a second discussion with somebody else within our team. It can be outside our team, but in this case, it was within our team.
Yeah. Okay, so you would prefer them to email something through earlier to their account?
It would be helpful.
Yeah, that's great. I think that's been prepared. And I'm pretty sure it's the same person. If you're married, would you recommend that you book to come in together to discuss his approaches? I would suggest that's a strong yes.
It's a strong yes.
It's an
we use a whiteboard. We put a line down the centre, and we ask. Often it will be either the husband or the wife, or the one male or female, or that doesn't matter. One or the other. We'll ask first what their goals are, and then we turn to the other partner and we say, "Now, what are your goals?" And sometimes they're not aligned, and that's a great conversation to have. Entertaining as well.
I'd recommend you have that at home, but it's good to be on the same page. But so they're great questions, and absolutely being prepared and talking to your accountants and your team at RJS before you come is essential, and coming together is also. And Tony, would you like to answer that question too?
Yeah, look, it's and much like Roy's just said, I've certainly had clients where they've had, and a fantastic example is where they had 5 goals, so 1, 2, 3, 4, 5, and I was listening to these clients and they were saying the same thing but slightly different. It just didn't make sense to me, so I threw it up on the board and said, well, okay, you tell me. So I asked her, she put A, B, C, D, E, and then I asked him to prioritise what was important to him, and his was the opposite way around. And it is, a fantastic and entertaining, as Roy said, discussion that you have. Well, okay, where would you like to start? Certainly, I would recommend that before you come in as a couple, certainly hopefully you've had those discussions before you do come in and have an understanding of what your goals are, and it's okay for them to be different. Absolutely. Another example, I had a client who said to me, husband and wife in the office here, and said, oh, look, when we retire, we're going to go up north and we're going to go fishing. And she said, the only way I'm going to go up north is if I'm flying up and I'm staying in a 5-star hotel, and he was wanting to, get the camper van and go up that way. So saying the same thing, but completely different. And it's important for us to be able to understand what you're looking for, and we'll actually really get down to the nitty gritty and ask those questions. Well, how and why?
Yeah.
As long as there's no divorce on the screen, that's the one that you want to make sure is on the actual whiteboard.
That's not always a good goal.
Not a good goal.
So, guys, I have got some technical question there. I'll come to that one. Taffy, you've answered. I'll answer that later. So just let you know, we'll cover that. What we've covered to date just leads on perfectly to the next slide. So, approaching the successful tax time meeting. What's the difference in the approach? Thanks, Stella. So what we've seen and what is really apparent is, and you've covered off a couple of these things now already, gents, is coming prepared and have consideration to an agenda. So as that person who just asked that question, thinking about it prior, particularly as a couple, and sending it into the accountant prior is a fantastic start. It gives the accountant time to prepare. It gives you time to prepare as well and start to ask more questions and think about the opportunities of, yes, minimising my tax, but growing my wealth, protecting my family, and identifying real strategic financial and personal goals with a time frame and a costing is essential, which is the second one. So absolute clarity on your financial and personal goals together. Time frame and costing. Know where you want to go and when, with a focus to make it a reality. And a tangible focus on creating wealth and opportunities, considering growing income from multiple opportunities, including personal structures. it's not talking about a second job. We're talking about working smarter, not harder. So that's a real difference in focusing on spending $1 to get 30 cents back. In other words, a tax deduction, which Kane's opening point. What are you really planning for? Deductions aren't really the aim of the game, because you're losing money, but you want to create money. Also, that there's multiple timelines. You have short, medium, and long-term goals. You have short, medium, long-term wins as well. So stepping that out. And the desire to make factual, educated decisions and review regularly with modelling and forecasts. This is paramount. This is where the business and structuring accountant and the wealth advisor sits and offers true insight to what your future looks like and allows you to make educated choices. So coming prepared and thinking about where you're going, timelining and costing, and now having a model that allows you to make educated choices with no longer just thinking, will this property be right for me? Will this investment be right for me? Will this super deduction be the right thing for me? It takes in a whole lot more. They're open to discuss options and alternate pathways, and they remove their financial blinkers. So they're not just about tax. I think we've covered that enough times. They know their numbers with certainty, so they know what they're trying to achieve. And the last one I think is key. They value professional advice so they can do more of what they love. That's the focus. They know that there's professionals around to help them. They know that they want to grow their business or their personal wealth. Yes, they want to minimise tax and get ahead, but their goals are really their focus. And they want to use a team to get there. And in fact, that was in that opening slide of Kerry Packer's, that was one of his biggest points, that he's required to have a large group of people around him for him to achieve his goals. So I think that's a real difference that we've seen in people approaching tax time with a successful slant versus just minimising tax. Kane, what's your thoughts on that?
Yeah, definitely. It's you know, we I guess if you go to investment properties in itself, we do have checklists, and we do have a brochure that we could send out to clients if they want to know what they can and can't claim. We have a checklist on the back that can help them out before they come into that appointment. So it's preparing them going forward. Asking more questions. It's no harm. There's no rush to get the tax return done. I keep saying that before. We've got plenty of time to get it done. Let's find some factuals and let's go back and do some research, but also have all your receipts, everything together. It does make life a lot easier because then we can spend more time on the goals going forward if need to be. But otherwise, yeah, all good.
Yeah. Roy, could you share an insight where you've seen people you're working with go through this process when they first met? You know, you've shared lots of stories with me where people first start working with you, you ask more questions, you do your gap analysis, and then you see them progress to this real approach, focus on creating wealth.
Yeah, I've had an example that comes to mind is it was about 3 years ago, we picked up a new client who was actually a very good friend of mine. He worked for this company. And I sat down with him. He had some financial troubles at the time. And we said, what are our priorities? And we listed out we had nearly a page of things. One of them was to asset protection. It was close down a company, start up a new one. And on that list, somewhere down that list was about buying a factory, buying a house. It ended up, we set up a self-managed super fund 6 to 8 months later. We saved any personal assets with a close down of one company that had a builder go broke and he didn't get paid. And about month 9 or 10, I had another meeting with him and I said, okay, we're up to this part on the list. And he had no insurances at all. And we went through and did an insurance review with the wealth management team. And some 12 months later, he was diagnosed with cancer. He has survived, fortunately, but the income protection component and the payout he wouldn't have survived financially if he didn't have that in place. And he's a great advocate for RJS because it came down to our first appointment that we called the gap meeting, goal assessment process, and with a list of things and action items that we had to cover off on. And he's so thankful that we couldn't do them all in one day. It was about, let's tick these off so we get them all done. And he's a great advocate now, and he's very thankful that we did that work and got him covered.
Yeah, well done. Well done. That's a great example of just moving away from tax or removing from any single strategy, actually, we should say, having that wider discussion.
Yep. I comes to mind. I have dozens and dozens of examples. Another one was somebody on the list. We had a will, and he was so slow to get the will completed. And protection of assets upon death is pretty important. And unfortunately, the person that's just coming to mind did pass away about 3 weeks ago, and has left an ex-wife, an ex-girlfriend, and 3 children, one under 18. And without a will, it would have been such a nightmare. And I'm just so thankful for the family who I know through doing their tax returns. I'm just so thankful that we sort of pestered him a little bit to say, come on, let's get this will done. And he did. And the family are so much better off for it.
Yeah, it's a good point you raise. It does take some pestering sometimes, doesn't it? Is it hard to get people to widen their scope and views? I'll hand that to everyone. Is it, you don't want to sound like a serial pest or a stalker, but at times as professionals, we can see the opportunities and we can also see the pitfalls. What's your best approach to engage?
I think it's about knowing what's right for the client. It's not what's right for us. It's got nothing to do with, nothing to us when he goes out to a solicitor and gets a will done. So it's not about us. It's about trying to do the right thing by the client and make sure he's going in the right direction. And I think everybody on this earth says I should have a will, but I think a small percentage of us do. So it's a case of, that's an example where you just got to do what is right for the client, and you've got to persist sometimes to the point of not being rude and not offending a client, but trying to push people, because that's our job. That's our role.
Yeah, good point. Which is part of today, to empower our clients to ask more questions of us too. Tony?
Yeah, I agree. Well, definitely, I will sit with the client and in that appointment and say, when's the best time for me to catch up with you? You tell me, let's lock it in. I'll put a reminder in my diary and I'll ring them and say, let's get together and have that conversation. It's a good feeling from our end to actually have that conversation and actually put that into play and see an end result if something does happen, that we've actually done something for them. It's more of a satisfaction for us. Like Roy said, it's not about the money, it's about what we're providing for that client at the end of the day. So it's all about them. And so if we can do a lot for them and see the journey of where they've come from to where they are going to be in the future, it's fantastic. We've got so many services that can help them out.
True. Tony?
There's no better feeling than seeing a client or clients achieve their goals, whether it be personally or via business. And certainly if there's a few things I'd say is, number one, be open to solutions. I mean, that's what our team's there for. We've got a great number of experts in different fields. As an example, if I was looking for agriculture advice, Kane would be the person I'd go to. And if I didn't have the knowledge, or if I didn't have the knowledge in investment properties, Roy would be the person to go to. These guys are top of their field, and we've got many other staff within our business that are very much similar experts in their business. And the other thing that I would say is that to treat us like board members of your business, because that's effectively what we become. We'll sit there within your board meetings and as such assist you moving forward. We'll pose the questions that you don't really want us to answer. Want us to ask. So that's important because if you've got someone there asking the hard questions, it means we'll get the right answer sooner or later.
Tony, I suggest we can act that role as for individuals as well.
Absolutely, and from an individual perspective, I mean that's what from a wealth planning point of view, that's what KP, Joel, Trevor, and myself do. It is certainly asking the questions and being there for clients and saying, well, okay, I understand what you're telling me. This is, and I'll give you the example of retirement and retirement, and I'm talking now a little bit more wealth focused, but I know what retirement looks like. Why? Because I've helped clients retire 1,000 times plus over the last 20 plus years. So I know what we need to do to get there. For an individual, they only want to retire once, because if you retire more than once, you probably haven't done it right the first time. Right. And so it's important for us to make sure that we, clients open up and we'll ask those questions. And it's important for us to, I'll say, be that board member within whether it be a family or whether it be within a business. And certainly for clients to be open to solutions.
Yeah, right.
I think you call it, Tony, a mediator between the husband and wife. That's what it comes
Mate, sometimes you don't want to be that.
Look, I think the important thing is that, you know, our role is to empower our clients to ask more questions, dig deeper, and push us for more as well. I think that's really a big key of today. Is we want to encourage a wider discussion and for people to be prepared for that.
Sorry, Paul, I was going to say, it's easy. I mean, it's easy for clients to come in and just say, hey, look, do my tax return. Extremely easy. And you know, the team can do it, and they do it with their eyes closed. But to actually really get value out of the team, it is, you know, how do we push ourselves further as individuals or as a business? You mentioned Taffy before. Taffy, what do I need to do to make my business go where I want it to go? You know, and so use the accountants. I mean, you know, they're very skilled people, and they've got the resources at their fingertips.
Yeah, true. Good point there from Jeffrey. Note during GFC, many came back to work during GFC, had to come out of retirement. Yeah, it was a devastating place to be. And some people did really well. Some people did really poorly out of it. Tony, you want to address that point?
Yeah. Look, everything, whether it be business or whether it be personal, everything's based on cash flow. And so it's important whether you're individuals or whether you're a business to make sure that you've got a bucket to be able to make sure that you've got enough cash there sitting to one side for emergencies and so on. Now, no one envisaged that there'd be a pandemic like we've got, but during the GFC, many came, and as Jeff's written there, many have come back to work from retirement. You had a number of options. Yes, you can go out and use and earn money, so you're not using your own, or you could use your own. And if you're using your own, where did it come from? If you're selling assets to top up your cash, that's an issue because you're selling them at a lower point in time. Or alternatively, if you had a cash bucket, well, it didn't really matter. Right, because you had enough money there. You know, the assets that you had, whether it be property or shares or whatever the case is, that's going to recover. If you're taking from cash, cash is cash. Cash doesn't move. So it just depends on an individual and what they were looking for. But yeah, absolutely, there were some people that came back to work, and for them, maybe it was their situation that they thought, well, I'd rather earn an income as opposed to use the money that I've got in place.
Yeah, true. Okay, gents, so let's move on to the next slide. We've covered quite a bit today in detail. I suppose, you know, the rubber hits the road. For everybody listening at home, where do I start? What's our next step to prepare and get success? It's coming to tax time. The RJS team's primed and ready to go. It's a massive team ready to meet as many times as required. What do they need to do to prepare? I'll start with you, Roy, in 4 or 5 words. What's your big takeout for everyone at home to address before tax time?
I would list out your expenses and income like you normally would, but also give some thought to your goals because we want to have that conversation.
Yeah, great. Come prepared. Tony?
Exactly that. Certainly your goals and, bring in everything financial. Everything that you've got, I'd much rather somebody brought in and Roy and Kane would agree. I'd much rather people bring in everything that they've got, and if we don't need it, we'll leave it to one side. But at least gives us an opportunity to look at everything that's there. But also then, what are your goals? Where are you heading? Are you on track? And they're the discussions that we really want to get into because that's where we feel that we add value. And as I said earlier, there is nothing like, being able to provide value to a client and then seeing them flourish, whether it be in 6 months, 12 months, or whatever the case is.
Great. Kane?
Yeah, definitely planning ahead, but just spend more time on it. Spend more time on getting the right facts. It doesn't really take long to check through your bank account and look for Telstra on your bank account by doing a search. It's very easy to do that to get all your mobile phone bills for the whole year. Get the facts, come up with the right details. If you went to Officeworks about 10 times throughout the year, I'm sure you've got all those receipts there, but you could do searches on your bank details on your actual online account. And that can actually give you more scope to give you some facts there when you're actually prepared to come and have that appointment. Just spend time and getting it right. Don't rush it. You'll get your money. They're not going to take it away from you. You've got plenty of time to get it over by the end of the year. But just get every little detail. Don't miss anything. Too late once it's done. You can amend it, but you don't want to just get it done once.
Great. Thanks, gents. That's, I think Roy stuck to 5 words, so that's great. The rest of you will be fined. Our Christmas hamper is getting larger. So, guys, if we could summarise, it's know your goals and know where you'd like to get and be clear on them. Know your facts and come prepared are really the biggest ones. And I think the attitude to have a wider discussion and push your team for more, I think is key. Not be in a hurry. They're there to help. If you're looking for an agenda, I said right in my very opening slides, the service circle. That's a great place to start. If you work your way around that outside, you'll discover it's tax planning, but it's finance structuring, it's superannuation, it's investment strategies, it's retirement planning. It includes risk and asset protection. It covers debt reduction, debt management, structuring. All those types of things is a great place to start and prepare when you start to see your tax account, which is coming up very soon, on the phone or not. And as that lovely person said, send it in early. That's a great idea. There's a couple more questions here that I'll answer, some technical ones. So, a couple of good thank you. Here's one from Taffy. It's a question probably for you, Roy. A sole beneficiary from his discretionary family trust would like to access 10K from his super due to financial difficulty. Are they eligible? The family trust has reducted his income by 30% in April-June quarterly turnover, and he receives JobKeeper as an eligible participant. Is he eligible to take out 10K?
If he's getting JobKeeper, the regulations were that he's got to be getting JobSeeker. But if his hours have dropped by more than 20% because he's a sole director or trustee or beneficiary, then he may be eligible. The only way to get the 10K is to go do it through your MyGov account. And when you link that to your super fund, just go through the provisions right there to double check that you are eligible, because there was a release early this morning to say that if people get super out when they're not eligible, so make sure you tick off the eligibility, that the fine could potentially be $12,500 and you've got to repay the $10,000. Like financially crippling people if that's what happens.
Great. Yeah, great.
Yeah.
Okay. Thanks, mate. There's a couple of other questions here. Is there anything different? This could be Kane or Roy. Working from home, do people need to be aware of any difference between COVID compared to pre-COVID period with home expenses?
Yeah, they certainly do. You happy for me to answer that, Kane?
Yeah, go for it.
Yep. So prior to COVID, prior to the 1st of March, we would like a diary note as to how many hours you worked at home on average per week. We'll be using 52 cents per hour. From the 1st of March, we would like to have a different diary based on how many weeks and how many hours you worked from home. So there's different rates. That goes to 80 cents per hour from then. So it's almost like one diary up for 9 months and different diary of number of hours for the other, March through to June.
Yeah. Okay. Thanks. There's a couple of, there's 3 specific superannuation questions there about changing super funds. For those who ask those, we wouldn't be able to answer those today. So the simple answer is it would be very much dependent on your personal situation and would certainly require a lot more discussion. There's simply not a yes or no answer for swapping super funds. There's a great amount to think about in that. Minimising tax for the rest of those. Here's one from Jeff. Qantas, a recent shocker to the economy, shares, etc. Any others likely in the near future? Probably one for you, Tone.
Look, there'll always be shocks, whether it be now. The one thing I'll say is we don't know when these shocks will come. You know, you could go back 6 months ago, sitting here in January, and everything looked a lot rosier than what it was today. In saying that, I don't look at them as shocks as such. I look at them as opportunities. So Qantas, as an example, yes, tough for them. They've had to lay off staff and so on. But as with many businesses in the current environment, they're looking to be agile and look at how they can remodel their business to make sure that they're profitable and they're going to be around in the future. So there will be plenty of others that will be doing the same, whether it be laying off staff or whether it be just reorganising their business.
Yeah, okay. Here's one that we see, is probably for you too, Tone. We see or it's harder to unravel. Can I refinance and increase the loan on my investment property to put extra money towards my principal place?
I'm going to throw that over to Kane and Roy first from an accounting perspective, because that's certainly someone's looking to do that for tax reasons.
Yep, that's a no-no at the tax office. The tax office look at not what the security is that you've taken the money out from the bank. They look at what the money is used for. So because even though you've used the investment property secured loan, you've taken money out of that. The tax office says, what was it used for? If it's for a holiday or to pay off your personal home loan, it's not a tax deduction. And that taints the original investment loan. Absolute no-no, don't do it.
Yeah, it's something called upside down debt that we see when people start with investment properties to go into their PPRs, don't we, Roy?
Yes, correct.
Something you're aware of. Yeah, that's why you talk to your accountants early before you do it.
Talk to an accountant before you buy your family home or your investment property, because structuring, the most common thing is we'll just put it in joint names. Not always the right answer, though.
Yeah. An upside down debt just leaves you with a debt that's no longer tax deductible. So we don't want to do that either. Okay, last question here. This one's a technical one for Roy and Kane as well. Our business was legislated to close from March 23 to June 22. We did receive a 10K business grant, which was put towards our rent and outgoings. We were not able to get JobKeeper. Is there any additional assistance we are entitled to?
My first response is the 10 grand grant. That's the state government grant.
Mm-hmm.
State of Victoria. Well, a condition to get that was that you actually got JobKeeper.
Right.
So maybe the person is talking about the cash boost, which was part of your BAS, which everybody got if you employed people on wages. That was 10,000 minimum on the March BAS. There's another 5,000 minimum on the June BAS, and then 5,000 on the September BAS. So that's really what you are going to be entitled to.
Okay, so best thing there, jump on the phone to RJS contact straight away.
Yeah, your accountant at RJS will point you in the right direction, and it should happen automatically, those extra 5 and 5, when you lodge your next lot of BASs.
Yeah, great. Okay. Thanks, gents. Thanks, Stella. We'll go to the next slide. Thank you, everybody. As I said in our opening presentation, please pick up the phone. Everybody's here to help. Very happy to offer 30 minutes to discuss everything we talked about today in a more personal detail in prepping for a really successful or more successful tax meeting with your professional advisors at RJS. I think it's a great place to start. So thank you to everybody who jumped online today from our client base, and also from Kane, Tony and Roy. Much appreciated. We really enjoyed the insights. For everybody else, thank you for joining us. We've had great feedback from these live webinars, despite some technical issues along the way. They do work really well. It gives us a great chance to continue to work and engage with each other and you guys. Please keep the feedback coming. Please let us know what you'd like to see more of. Following end of financial year, we are going to run these once a month, and we're going to run a trial. We have got some fantastic feedback of what you'd like to see, but please keep them coming. We will change the agenda to suit. We'll open it up. We'll have more experts online able to answer more of your questions, and we'll set it out on a regular basis. So again, thank you. Keep an eye out for the schedule. That will be released in early July, so you can plan and prepare for it. They are, of course, always recorded, so you can come back to them. And everybody at RJS is very happy to pick up the phone or take a phone call or a Zoom meeting and speak to you at any time. So thanks again, everyone, and have a fantastic afternoon. All the best. Cheers. Thanks, gents.
Cheers. Thank you.